Tesla, the ultimate growth stock, not showing much growth as of late. That's at least the opinion of analysts over at Wells Fargo.
Also cutting their price target to 125 from 200. So that implies about 30% further downside from where we are currently, where we closed yesterday.
He's warning in particular that cutting prices to boost sales isn't working, noting that sales were only up 3% in the back half of 2023, whereas prices were cut by 5%.
What about this Model 2 that they expect to bring out in 2025? Is it going to be a game changer, or is it too little too late here?
All that and more. So let's get to it. Tesla stock is down in the pre-market today, almost 1.5%, sitting at 166.97. For the week, Tesla is down almost 5%. And year-to-date, down over 33%. I went ahead and sold the protective put that I had in place that expires at the end of the week. A little over a 70% gain, if you will. And now I have to seriously contemplate a long call for 2026. Let me see if I got about $6,000 lying around somewhere.
Start off with Tesla, the ultimate growth stock, not showing much growth as of late. That's at least the opinion of analysts over at Wells Fargo, cutting their recommendation to underweight. Tesla now has 13 cell equivalent ratings. That's more than double the number from just 11 months ago.
I don't even know if we've reached peak fear yet. A growth company with no growth. That just proves how little research Wells Fargo does into Tesla the company. On the earnings call, Elon and team said that there will be significantly less growth than there was in 2023. Not no growth, less growth. And that's only when you're talking about the automobile side of things. I get it, it's over 90% of revenues, I get it. But what about the growth of the burgeoning energy division? Does that not even factor into your 125 fair value estimate for TSLA?
The analyst over there, COLIN, LANGAN, says Tesla's strategy of cutting prices to boost demand, that's played out. And he expects volumes to remain flat this year and fall next year.
If you say so, Colin. I think I'll stick with the projected goals of 20 million vehicles per year by 2030. Even if volumes were to remain flat this year and fall next year, which I highly doubt, I don't plan to sell a single share of Tesla until I feel that they can't meet their goal of 20 million vehicles per year. As it stands, with the next generation vehicles set to be produced in 2026, more factories on the horizon to produce that mass vehicle that has half the cost of the Model Y and the Model 3, I can't wait for TSLA to catch many of these analysts off guard.
Well, this has been the clear laggard of the big seven, big five, and it seems like analysts are getting a little bit more negative on it.
They are, and I think overall we've seen that now for the last several months because this name, it peaked 2023 performance. It was one of the highest buy rating stocks in the S&P 500. It was well above the sector or the indice average, which was like 55% over like 65% they saw. Now we're down to 30% of analysts that cover this name rated at buys. That's pretty disappointing.
You know what, Jenny? It is disappointing that we have a lot of fair weather analysts. When the stock is doing great, they want to pile on. They want to jump on its back. Using the stock market as a gauge on how well the company does, I find that a little bit lazy. There's a reason why I only invest in one stock. It's because I'm only willing to do this level of research for one company. I've gone back over 2 decades just to hear interviews, read books, and learn all I can about this company that I think is going to transform the way people and goods and services transport themselves around this beautiful country. And dare I say, the world. On top of many, many other things. I came to that realization by using their products. I've listened to what Tesla has to say, put a value on how accurate their estimations are, and in that same light, I've listened to everything that various analysts had to say over the past decade or so regarding TSLA and how the company of Tesla will fare. And I gotta say, Tesla's track record is a lot better than the majority of the analysts on Wall Street.
Adding to this pessimism, downgrading shares to underweight. That's their equal to sell, also cutting their price target to 125 from 200. So that implies about 30% further downside from where we are currently, where we closed yesterday. But they expect these unit volumes to disappoint as price cuts, in their view, are not going to have the impact on demand that Elon Musk is hoping for. They actually see diminishing demand as a result. They also do believe the economics of Tesla's next generation vehicle, which is now pretty much widely known as the Model 2, is likely tough as a mass market compact vehicle, especially because we just got news of that mass market vehicle from Rivian. Not saying they'll be necessarily stealing market share, but it's a major competitor, at least domestically.
The only competition that Tesla has is against internal combustion engines. Rivian's mass market vehicle, which will come out probably sometime in 2027, 2028, will be a welcome addition to help transition the world to a sustainable energy economy, along with anybody else that figures out how to make battery electric vehicles efficiently and profitably, which, as Rivian would tell you, is easier said than done.
Tesla. It's a growth company with no growth. That's according to Wells Fargo analyst COLIN LANGAN. He's downgrading the stock today from equal weight to underweight. But on the flip side, Wedbush's Dan Ives, a staunch defender, he says the negative noise on the street is overblown. Let's bring in our senior autos reporter, Pras Subramanian, for more. Colin has been tepid on the stock for quite some time, but tepid is not underweight, right? And so it's pretty dramatic here that he's downgrading the stock.
Yeah, I think that headline sort of says it all. The growth, company with no growth. It's kind of highlighting the concern on Wall Street we've seen recently for Tesla. He's warning in particular that cutting prices to boost sales isn't working, noting that sales were only up 3% in the back half of 2023, whereas prices were cut by 5%. So he's kind of concerned there. Tesla itself warned about their growth prospects, saying that they see significant sort of deceleration there. Most analysts think it'll be around 20% for this year. We'll see, maybe less. But we've seen this story before, right? Where the bears sort of got going here in Tesla, and then they were burned. We'll see if Musk can kind of pull a rabbit out of a hat here. But long term, I think you mentioned Dan Ives. I think people like Dan Ives, even Adam Jonas at Morgan Stanley, say that this is more of a long term play. Look to 2025, even 2026 for a return of that growth. The question is, how long can investors last here when the Mag 7 stocks or the rest of them are kind of taking off, or at least doing better than Tesla?
Oh, you're asking me how long I can last? Well, to quote Captain America, I can do this all day. In fact, let the price continue to fall, and I'm going to become more adamant about the significant buying opportunity that is within TSLA.
As Tesla is getting hit with a big downgrade to underweight from equal weight over at Wells Fargo, citing numerous headwinds ahead. The firm expects volume to disappoint and also lowered its price target from $200 a share to $125. Here's the analyst who made that call, Colin Langan. Phil also on the line with us. Colin, welcome. Good to see you. I'm curious, what is the market share of Tesla in the U.S. Among total automobile sales, auto and truck sales, and among EV sales? What kind of share do they have?
I mean, they're very small into the overall market. I mean, they're very large in EVs. I mean, what we're seeing, and that was the point of our report today, is that we're actually looking at the impact of the price cuts are surprisingly low at this point. We saw volume actually, if you look at first half to second half globally, up just 3%, and pricing was down 5%. And that's really what driving our lower deliveries. We're expecting deliveries to be about flat this year because we're really expecting more limited ability to cut price. Otherwise, you're going to hit a point where you're not very profitable anymore.
Industry leading margin. I don't understand what you're talking about, Colin. Tesla prepares to ramp the next generation vehicle, refresh some of the offering that it currently has. Tesla has already stated that it will have significantly less growth than they did in 2023. But they're still gonna have some growth, buddy. Given the company's track record, I'm giving them the benefit of the doubt that they'll be able to navigate these situations better than any other company possibly could. That's why nobody else in the automobile industry can touch them, and it's also why I think they'll be the most valuable company on the planet in a decade's time.
What about this Model 2 that they expect to bring out in 2025? Is it going to be a game changer, or is it too little too late here?
Well, I mean, I think that was the other part of our report today. We were looking at the potential for Model 2. I mean, and one of the things that really is concerning to me is that it's different from other launches. This is a mass market priced SUV. That's going to be very tough to do. I mean, the actual, if you go to an internal combustion engine, compact vehicle today, they're not very profitable. You add on an e-powertrain, you're probably starting off at a losing point. And then if you're then really betting on this unboxed production, which is the new manufacturing methodology they plan on launching with the Model 2. That's a bit of a wild card. It's just never been done before.
Never been done before. I don't think Tesla has a history of doing things that's never been done before. If I'm not mistaken, Tesla has a history of doing the impossible, especially in the eyes of these short-sighted analysts. The Model S, considered impossible. Producing 500,000 vehicles by 2020, considered impossible. The Model 3, considered to be impossible. Very difficult, mind you, but nary impossible. Many assumed it would be impossible for the Model Y to become the best-selling vehicle of 2023. Yet Tesla did the deed. Something tells me that a laundry list of future impossibilities are going to be tackled by Tesla.
What does unboxed production mean? I noted it in your note, and I wasn't sure what it meant.
It is a new term. No one has actually done it before. So the idea is it's a change in the entire assembly line. And from experts that we talk to, they're trying to eliminate all the bottlenecks, automate as much as possible. The vehicle won't run through one line. It'll actually be assembled in different subcomponents and then come together at the end. This enables, one of the potential benefits maybe is you could put more throughput through the paint shop, which is the bottleneck today. But also you probably could automate more along the line and eliminate some of the manual inputs. So it's supposed to improve your efficiency. What we found in our report is that there's probably between labor and fixed costs that are absorbed per the vehicle, it's probably $9,000 to $10,000 per car. So if you could double that, there's like $4,000 to $5,000 in benefit. You really kind of need most of that benefit to get Model 2 to probably profitability given the powertrain cost you'll be adding.
Half the cost to produce the Model Y and Model 3. And needless to say, higher volumes than the Model Y. The Model Y is the fastest thing coming off of the production line. You expect to trump that level of production? Whew. It does sound impossible, but I'm going to continue to put my money on the company that's been doing impossible things for the past decade or so.
Look at all of the headwinds, not just for Tesla, but for electric vehicles overall. What do you believe is the biggest one right now? Is it the fact that we're not seeing enough models at the lower price points that would drive sales? Is it the concerns about range adoption or range anxiety, charger anxiety that is out there? What do you think is the number one headwind?
I think number one has been pricing. I think it's, and I think it's just the price. I also think we need sort of SUVs too, so I'm not sure a small vehicle actually necessarily addresses that for what Americans want. So I think one, people want more affordable EVs, and then two, it's always been charging. But the one thing we talk about in the industry, and one reason we're cautious on all of the Detroit 3 as well, so we're pretty cautious on the automakers right now, is the fact that there's still regulations coming. So the industry is going to be a really tough spot here because the automakers are going to need to sell more EVs to hit those standards, which means everyone's going to be forcing these vehicles into the market, which is never very good for profitability.
Model X, Model Y, these are SUVs. Granted, the Model X is a tad bit expensive, but the Model Y is the best-selling vehicle on the planet. I wonder which cars were in the top spot before the Model Y. Oh, it's probably these compact vehicles that Tesla plans to release with the next generation vehicle. Not only is Tesla running circles around everybody else building battery electric vehicles, let's be clear, they are the standard around the world. You can't build a battery electric vehicle in the world without comparing it to the category killer that Tesla is providing. In conclusion, these fair weather analysts seem to be taking cover as Tesla stock is on the decline, forever chasing the stock price in order to maintain their relevancy. O ye of little faith. The buying and selling activity on the stock market regarding TSLA has very, very little to do with the grand success that Tesla plans to aim for in a decade's time. I'm not shocked to see analysts not understand the true value that Tesla represents. For some, it would involve Tesla accomplishing the impossible, which they have no prior history of doing. So while everyone else is absorbed in the fear, uncertainty, and doubt that surrounds Tesla, I'll continue to gobble up as many shares as I possibly can, knowing that in the future, the stock market will catch on and understand that Tesla is destined to be the most valuable company in a decade's time. That's all I got for you today. Be easy. Peace.